I got gas for $1.57 yesterday. Oh, where was that at? Taco Bell.
Good afternoon.
Oh shit, there he is.
The problem we're facing with gas prices has two roots. First, the pandemic. When COVID struck, demand for oil plummeted, so production slowed down worldwide. Because of the strength and the speed of our recovery, demand for oil shot back up much faster than the supply. That's why the cost of gas began to rise last year. The second root is Vladimir Putin. The start of this year, gas was about $3.30 a gallon. Today, it's about averaging $4.20, nearly $1 more in less than 3 months. And the reason for that is because of Putin's war. And now many people are no longer buying Russian oil around the world. I've banned the Russian import of oil here in America. As Russian oil comes off the global market, supply of oil drops and prices are rising. Now Putin's price hike is hitting Americans at the pump. So today I'm laying out a two-part plan. If we want lower gas prices, we need to have a more oil supply right now. For U.S. oil companies that are recording their largest profits in years, they have a choice. One, they can put those profits to productive use by producing more oils, restarting idle wells, or producing on the sites they already are leasing, giving the American people a break by passing some of the savings on to their customers and lowering the price at the pump. Or they can, as some of them are doing, exploit the situation, sit back, ship those profits to the investors, and while American families struggle to make ends meet.
Companies pledged higher dividends and stock buybacks to investors as Americans were hit with soaring gas prices.
Our cash flow driven return of capital framework uniquely prioritizes our shareholders as the first call on cash flow generation, not the drill bit.
That's Marathon Oil CEO on February 17th, when the national average for gas prices was around $3.52 per gallon. That same day, Pioneer Natural Resources told investors this.
We're not going to change our growth rate. We think it's important to return cash back to the shareholders.
The day before Russia invaded Ukraine, Diamondback Energy's CEO also told investors they won't risk profits by increasing supply.
No one wants to see that shareholder return program, put at risk with volume growth.
Diamondback also told investors the profit windfall they're experiencing is the moment investors have been waiting for. And on the day Russia invaded Ukraine, Occidental Petroleum CEO put it bluntly.
We have no need and no intent to invest in production growth this year.
This is a moment of consequence and peril for the world, and pain at the pump for American families. It's also a moment of patriotism. I want to acknowledge those companies that have already announced they're increasing immediate production. They're investing money to produce more oil, and they've indicated they will be producing an extra 1 million barrels of oil per day, probably starting as early as this fall. That's progress. But some companies have been pretty blunt. They don't want to increase supply because Putin's price hike means higher profits. One CEO even acknowledged that they don't care if the price of a barrel of oil goes to $200 a barrel. They're not going to step up the production. I say enough. U.S. oil companies made nearly $80 billion in profit last year, and this year those profits are expected to continue to soar. This is not the time to sit on record profits. It's time to step up for the good of your country, the good of the world, to invest in immediate production that we need to respond to Vladimir Putin, to provide some relief for your customers, not investors and executives. I'm a capitalist. I have no problem with corporations turning a good profit, but companies have an obligation that goes beyond just their shareholders. No American company should take advantage of a pandemic or of Vladimir Putin's actions to enrich themselves at the expense of American families. Right now, oil and gas industry is sitting on nearly 9,000 unused but approved permits for production on federal lands, or more than 1 million unused acres they have a right to pump on. Families can't afford that companies sit on their hands. So, to help execute this first part of my plan, I'm calling for a use it or lose it policy. Congress should make companies pay fees on wells on federal leases they haven't used in years and acres of public land they're hoarding without production. Companies that are already producing from these wells won't be affected, but those sitting on unused leases and idle wells will either have to start producing or pay the price for their inaction. Look, the action I'm calling for will make a real difference over time. But the truth is, it takes months, not days, for companies to increase production. That's why the next part of my plan is so important. Today, I'm authorizing the release of 1 million barrels per day for the next 6 months, over 180 million barrels from the Strategic Petroleum Reserve. This is a wartime bridge to increase oil supply until production ramps up later this year. And it is by far the largest release of our national reserve in our history. It will provide a historic amount of supply for a historic amount of time, a 6-month bridge to the fall. And we'll use the revenue from selling the oil now to restock the Strategic Petroleum Reserve when prices are lower. And we can do that. Look, the bottom line is this. Between ramping up production in the short term and driving down demand in the long term, we can free ourselves from our dependence on imported oil from across the world. So may God bless you and may God protect our troops. Thank you.
Mr. President,